For this discretionary trading strategy, what are the kind of instruments that you use? Do you actually look at stocks, or you just purely look at individual currency pairs?
I look mainly at the FX and futures market as well, similar to my own systematic trend following portfolio of markets, right? But I would say some markets I don't trade, reason being because the broker on the discretionary trading, right, they don't offer those instruments. Yeah, they don't offer as many instruments as the systematic trend following broker that I'm with. So that's the reason why I don't trade as many as the systematic trend following markets that I do trade.
So do you look at equities as well, like things like the more liquid ones like the US market or the Hong Kong market? And do you think the strategies that you use can actually be applied to all those markets as well? And any reason why you're actually not trading those markets?
I look at it in terms of indices, but not really the individual stocks, right? Yeah. So I look at it, I trade it in terms of the index, like the S&P 500, NASDAQ. Yeah, those are fine, right? I find that the principles and concepts, it work the same, but I don't really trade individual stocks. Yeah, not that I wouldn't say not because it doesn't work, but because at this point of time, right, for me, I'm really pretty much occupied with futures and FX right now. So there's really no need at this point of time to go and trade individual stocks since I have ample opportunities on the FX and futures market. Yeah.
I see. So what is, like, for example, 3 of your favorite setups that you always hope to be able to see and find it happening in those instruments that you are tracking?
I would say I like to trade a trend continuation trade. So for example, market is trending, does a pullback, a weak pullback. That's I would say a very straightforward setup to trade. Second one would be what I call a false break. Market breaks out of resistance or breaks down of support and then suddenly do a 180-degree reversal and goes back into the range. That's another setup that I do trade. And the third one is just a very typical breakout. Markets in a range for a long period of time. Finally, it breaks out. I look to trade the breakout as well. I'll say these are my 3 core setups that I do trade.
I see. All right. So let's move on to this part, because I understand that you actually do help to coach traders as well as part of your other business model on top of actually doing your own independent trading. So I understand that you exclusively coach traders just through an online basis. Is that the truth? And how did that idea actually came about to you?
Yes, I do. Everything is all online based, and I think it's quite natural since I had a blog. People request for more coaching, more help, then I would say, the mentoring program is kind of like just, naturally leads down that road to how it happened.
I see. So to date, how many traders have you actually been part of this mentoring program? And where are they usually based? Are they like based in Singapore, in Asia, or could be around the world?
Okay, so in terms of the mentoring, about 250 traders to date. Maybe 40-50% from Singapore, and the remaining is pretty much over the world. You have US, UK, India, Philippines, right? Yeah, that's the ratio thereabout.
I see. Because this is a very interesting part as well, because you have like first row seat to understanding how the traders other than yourself typically think about, because they share with you about their issues that they have. Not to be like very, very specific on which trader, but generally as you coach all these 250 traders, what are the common kind of issues that they typically bring out to you, or you could typically identify with them to be able to help them? Maybe that's something that would be really useful for the summit attendees to understand.
Okay, so I think one of the core issues that keep coming back is that they just don't have a plan, right? So they just look like, like for example, I just shared like different ways to trade the market, trend trading, etc. or trend following, and then they'll just go back, look at the chart and try this method without really diving in deep to understand the core concept idea behind why it works, right? So if you're just going to dabble every new stuff that you come across, right, then when the losing streak come, you're just going to give up and move on to something else. So that's one of the biggest problem I see, right, is that they just don't dive in deep enough into a trading methodology, studying why it works, how it works, and then applying it consistently. So that's one. Another thing is that trend following it's simple to execute, but it's not easy to trade because of the drawdown that comes with it. You can have drawdowns in terms of years, right? Losing years, and not many traders can swallow it, right? So traders may learn a new strategy works well, right? And they trade it for 1 year, and after that 1 year they realize they lost money, and they say that, hey, I know in the long run the big picture works, but over the last 1 year I've tried this strategy, it doesn't work, right? It feels that I'm not making any progress, right? Even though that's kind of part and parcel of trend following. So I would say that's one of the biggest issues that I see traders face. Yeah.
So how do you actually go about helping them to overcome this kind of obstacle? Is it something that as a mentor you can do something about it or get them to commit to something about it? Or is it just something that they would just really just have to overcome it by themselves?
So of course, at this point of time, me as a mentor, I will share with them the facts of what trend following is like, the year-by-year breakdown, the month-to-month breakdown, and explain to them that's the reality of trading. I think knowing that you are in this with other similar trend followers or even the hedge funds, right, helps with the psychology, because if those big boys managing billions of dollars have a down year, a down month, you kind of know that you're doing something right? Whereas if you make money and most of in the industry actually lost money, you should be a little worried, because why am I making money when most of them executing similar strategies are losing money, right? Once or twice is okay, but if that happens repetitively, right, it's a cause for concern. So I would say looking at what others are doing, applying similar strategies, right, if they are in the same boat, you're pretty much okay, right, since that is the part and parcel of the strategy itself.